Welcome to Yahoo Finance's flagship show, Morning Brief. I'm Julie Hyman. Let's get to the three things you need to know today. First up, U.S. stock futures are perking up after New York Federal Reserve President John Williams said he sees room for the central bank to cut again as the labor market softens. This follows a dramatic session on Thursday. The S&P 500 logged its biggest intraday reversal since the height of the tariff turmoil in April. The benchmark index sank 1.6% after jumping as much as 1.4% in morning trading. It's now down about 5% from its October highs. Remember, Nvidia's results initially eased concerns around an AI bubble, but then that faded away and then some as the session progressed. Plus, the rout in crypto is deepening. Selling accelerated this morning with $1 billion in Bitcoin liquidated in an hour, according to crypto news site Decrypt. Bitcoin's headed now for its worst month since the crypto collapse of 2022. The token trading below $85,000 as volatility takes hold of financial markets. Despite a pro-crypto White House and surging institutional adoption, Bitcoin has plunged over 30% since rocketing to a record in early October. And the bids are in for Warner Brothers Discovery. Paramount, Comcast, and Netflix have submitted bids for the studio giant, according to multiple reports. The bids submitted are non-binding, and additional rounds are expected. That's according to the Wall Street Journal. Of the three bidders, only Paramount is pursuing all of Warner Brothers. That includes its studios and streaming, as well as its portfolio of cable networks like CNN, TNT, and Food Network. Comcast and Netflix are bidding only for the studios. Let's get a check in on stock futures. We are seeing them, as I mentioned, perk up here this morning a little bit. It's not a runaway gain by any means, but after the reversal yesterday and then the comments this morning from Fed officials, we've got the Dow futures indicating a gain of almost 250 points at the open. S&P futures indicating a gain of about 0.5%. NASDAQ futures up about 0.4%. Let's dig into our top stories of the day now. The Fed's John Williams says he sees room for a rate cut in December. Crypto extending declines, plus a mixed picture for retail earnings as consumers seek value. Joining me now, markets and data editor Jared Blikre, senior reporter Brooke DePalma live at the NASDAQ, and Federal Reserve correspondent Jennifer Schonberger. Jen, let's start with you this morning because John Williams coming out, we had some other Fed officials too, but the market seems to be paying most attention to John Williams, who's singing the song they want to hear.
Amen, Julie. Yep, that's right. New York Fed President John Williams signaling that a rate cut is on the table for December, something that markets thought may be in doubt after that stronger than expected jobs report for the month of September. Williams saying in a speech in Chile this morning that, quote, "I still see room for further adjustment in the near term to the target range for the Fed funds rate to move the stance of policy closer to the range of neutral." He sees this even as he noted that progress towards the Fed's 2% inflation goal has stalled temporarily because of tariffs. He thinks tariffs is adding anywhere between 0.5 percentage point to 0.75 percentage point to the inflation rate right now. And this is notable because, yes, it comes after the September jobs report that called into question whether the Fed would move forward with a rate cut in December, but also because he's part of the troika, as we like to say, which is Chair Powell, Vice Chair Philip Jefferson, and John Williams. And if John Williams is in the camp of seeing that a rate cut is on the table for December, then perhaps logic holds that Chair Powell and Jefferson and maybe other members of the Federal Reserve Board are also in the same camp or could be swayed to be in that camp as well. And we did hear from Jefferson earlier this week, who seemed open to the notion of a rate cut. He sees the greater risk to the job side of the Fed's dual mandate, which is where the market was sort of inferring that perhaps he could side on another rate cut for December. Now, we did hear from a number of other Fed officials, a very busy Friday morning here. On the flip side, Susan Collins of the Boston Fed, who is also a voting member for December, she seems more inclined to hold the line. She said that the September jobs report has not changed the picture for her much. She's paying more attention to those weekly jobless claims, but she's taking more signal right now from underlying resilience in the economy and concerns about inflation that she hears from contacts. So while she hasn't made a decision yet, she is more hesitant. She feels that the Fed needs to maintain a mildly restrictive stance at this point. So less inclined there. And we did also hear from two other members of the Fed who are not voting members, but who also seem cautious. We heard last night from Anna Paulson for the first time from the Philly Fed, who says she is moving cautiously into December, and that with each rate cut, the bar for future rate cuts becomes much higher. We also heard from Lori Logan this morning, who was speaking in Zurich, who reiterated that she didn't think that the Fed needed to cut rates last meeting, and given that the Fed has cut twice already this fall, she doesn't see the need to cut again in December.
Well, as you say, the troika seems to be where the market's attention is going. And Jared Blikre, let's talk about the backdrop this morning that those comments are coming into, because it was a wild day yesterday.
It was a wild day yesterday. Let's dial up the Wi-Fi interactive behind me. Just a quick recap. The indices, the majors, Dow is kind of leading the way here, up about 0.5%. S&P 500 a little bit less than that. Russell 2000 up 0.7%, so that's leading the way. And just a quick check of the bond market. We see the 13-week T-bill, that is down. That is pricing in more Fed rate cuts, so that's what the market likes today. But let's talk about, as you said, Julie, that price action from yesterday. Here's a NASDAQ. Early yesterday, we were up as much as 2%. Then we closed down 2. And that kind of a swing doesn't happen near market tops the way we are. We're only at 5, 6, 7% off of that market top recently. So that's very unusual. Then you take a look at the S&P 500, the 50-day. We've been talking about that I have till I'm almost blue in the face, but we are now solidly below that. And as you pointed out in one of our chats earlier, Julie, a gentleman from BNP Paribas pointed out that this was the strongest rejection yesterday of the 50-day moving average that we've seen since 1985. So what's going on here? Well, I think number one, we have the Thanksgiving holiday, and there's not necessarily a lot of liquidity in the markets. We also have options expiration today, and that could be contributing to some things. Yesterday, there was something in the options market going on called gamma selling. That's basically where options dealers have to sell into the market to hedge their positions. That can exacerbate the downside. We are still in that situation today, potentially, at least in the early goings. So we'll have to see how the day progresses. Usually options expirations date are a little bit less volatile in the indices, but today could be an exception. And then, just putting it all together here, is the market so dependent on a rate cut that we are this fragile? I think we've seen this movie before. Longer term out on the horizon, assuming that we don't plunge into recession here, we've got a tremendous amount of stimulus coming in the new year. So I think a lot of traders are hoping that we'll be able to buy this dip. Question is, where do we find the footing here, and how far lower do we have to go?
Well, and Jared, that question is even more acute in the crypto market right now, I think, right? Because you got Bitcoin, the selling accelerating this morning. It did bounce a little bit off the lows after those Williams comments, but it's still in the red.
Yeah, and Bitcoin was one of the markets that I was looking at yesterday pretty intently. It was really interesting. Here's a 2-day view. The sell-off in stocks happened right as Bitcoin was breaking 90,000. So that's what I'm circling right there. That seemed to be a critical level that just kind of instigated cross-asset selling for whatever reason. Sometimes selling begets more selling, and it can jump over from one market to the next. And Bitcoin has been a leading indicator of selling recently. Here's a 2-month chart. It started heading down in early October, so stocks peaked much later. And as you said, they got a nice little bounce this morning off of the Williams comments, but is it enough to arrest that downtrend? I'm still looking for 75,000, give or take 2,000. I think that's a big support level if you take the year to date. Actually, let's go to a 1 year. That is not only the low that we've seen this year, but it's also the high from a prior year, early 2024. So 75,000 is in the cards. Selling might not be over yet.
Yeah, and there's a lot of implications for these digital asset treasury companies that have really come into vogue. And as the price falls, questions about what they're going to do with their holdings. So that's a thread to pull on as well that we'll be following. I want to turn it over, though, to what's going on in the retailer market, right? Brooke, you've been following really closely all the retail earnings this week. We've talked a lot about the K-shaped economy, but the word that keeps coming up again and again is value.
Julia, I think the word value has been said 100, if not thousands of times on these earnings calls throughout this week. We heard from a slew of different companies: Home Depot, Lowe's, Walmart, Target, Gap, Ross, TJ Maxx, just to name a few. And what really the key word here was those value players like Walmart, like Ross Stores, and TJX, which owns Marshalls, TJ Maxx, and HomeGoods. Those were the ones that we saw move higher because of their results. They all beat across all key metrics that Wall Street put against the companies, and it's largely because they've been able to key into that value play here. They've been able to cater across all income cohorts, not just one. And that's what really is the key here, it seems like, to winning in this economy, this K-shaped economy, where the high income earners are seeing the stock market, at least previously seeing the stock market, do extremely well. They're willing to go out and spend, while that low income consumer is really seeking out the best price for their bang for their buck. And that's the ones that are winning. And Walmart, Ross Stores, TJX, they all mentioned this ability to cater across demographics, across those income demographics. And that is what you see as winning in this sort of environment here.
Okay, let's talk about Gap. Is it winning in this environment?
Well, Gap did beat across the street's estimates as well. And what we're seeing in this, and what they did call out, and what Wall Street really likes within this report, is that their key brands, Old Navy and Gap, those two did extremely well. And there were some interesting call outs on their call as well. I know we'll hear from the CEO in just a bit, but what they did say was that Old Navy and Gap was better than expected. The consumers are really responding to what they said was their product and storytelling. Now, keep in mind, Gap did do an ad using that nostalgic Milkshake song with a key pop group earlier this year, about 3 months ago. And that's what they said was gave them the ability to lower their discounts, but yet be able to continue to sell in this environment. And that's what Wall Street really likes here. They like the fact that they're able to keep price, but yet engage consumers that what they call, the right price for the right time. And so we're hearing from different firms, including Telsey Advisory Group, saying that momentum remained broad-based for Gap. They were able to see growth across all income cohorts. And this really underscores Old Navy's resilient value proposition. And those keywords, value proposition, is what is really holding onto the street this week.
And I have to keep reminding myself that the ticker is now GAP and not GPS as it was for many years. Jared, Brooke, Jennifer, thank you so much. Appreciate it. Coming up on Morning Brief, we'll bring you today's top trending tickers and count you down to the opening bell. We'll be right back. Now time for some of today's trending tickers. We are watching Warner Brothers, Foxconn, and Strategy. First up, Warner Brothers. The bids are in for the studio giant, according to Bloomberg and the Wall Street Journal. Comcast, Netflix, and Paramount Skydance have all made their initial bids. However, more rounds are expected. Warner Brothers said it would evaluate strategic options last month after receiving interest in all or part of the business from multiple suitors. Only Paramount is looking to purchase the entire company. Next up is Foxconn, also known as Han High Precision, unveiling a partnership with OpenAI. It's also making a big push into the U.S. The company aims to spend an initial $1 billion to $5 billion growing its U.S. manufacturing footprint. It's going to work closely with OpenAI to resolve the particular pain points of getting AI data centers up and running. Foxconn is the world's largest contract electronics manufacturer, well known for making Apple products, for example, and it'll make components now for data centers. Finally, Strategy. The company formerly known as MicroStrategy is dropping alongside Bitcoin. In recent years, it has grown to be the largest digital asset treasury, owning more than 3% of all Bitcoin. But its big bet on crypto means volatility. Bitcoin is currently trading below $85,000 per token, down 30% from its record highs. And there are questions whether there might be forced selling on the part of Strategy and other digital asset treasuries if Bitcoin goes below a certain level. We'll be watching it closely. U.S. futures are pointing to a higher open. That comes on the heels of a week's worth of sell-offs, including yesterday's reversal, with mega caps hit particularly hard. So let's look at whether it's time for investors to lessen their exposure to big tech and get defensive. Joining us now, Ken Mahoney, Mahoney Asset Management CEO. Ken, it's good to see you. So how are you thinking about the positioning in big cap tech after the selling pressure that we've been seeing?
I mean, it really was a perfect storm yesterday, minus George Clooney, I guess, with a low pressure system, high tide, rain, everything's coming out. I mean, and look, we went from a bunch of tailwinds just weeks ago to a bunch of headwinds. Those headwinds are, of course, the Fed. Will they, won't they? Today, I guess they might cut rates, according to Williams, and all week long parading saying they're probably going to leave rates alone in December. You have the Japan carry trade that's kind of unwinding. You had tech. And by the way, what happened yesterday in NVIDIA is not unlike what happened to Meta or Microsoft. It's been a tough earnings season. I mean, companies come out one after another, beat and guide higher, and the stock went lower. So add that to the perfect storm. So yeah, there's like nowhere to run, nowhere to hide. You got the crypto on top of all that. You shake it all up. It really has been a perfect storm for investors this week. Next week, seasonality kicks in. Thanksgiving on Thursday, usually one of the best weeks of the year, and investors can use that. That's for sure. Hopefully we get that opportunity.
So then, does that mean you've been buying going into next week? I mean, what amidst this perfect storm, what are you doing, and what are you doing for clients, Ken?
Right. So this year, no doubt, we were in NVIDIA, Palantir, and we stay in there a little bit, right? We trim when it starts going up parabolic. What we're starting to put together is a list for 2026, and the list actually started yesterday with Walmart, trying to find those companies that have contracts with Palantir and NVIDIA, that have investments in technology CapEx, and what they'll get on the other side. Walmart, yes, again, we're growth managers, so it's kind of funny to even talk about Walmart, but yesterday they beat and guided higher, right? And they're going after Amazon for market share online. And they're doing all the right things. All that technology is going to help them with logistics and inventory. So, Julie, we think in 2026, we're going to find those companies who've been spending a lot of money in tech, hopefully getting the return on investment and have those beat and raise guidance.
And it really felt like this was a big week in terms of catalyst, right? Of course, we got the delayed jobs report. We had NVIDIA. Now, as you look between now and the end of the year, Ken, what are the other big catalysts that are still remaining, that you're watching that could push markets in either direction?
Right. I mean, look, after everything that happened with those headwinds, we do have tailwinds. The tailwinds, we still have a very pro-growth administration, deregulation happening. This president zips around the world cutting deals in countries for individual companies here in the U.S. The trade, look, it became a crowded trade, and I was there too, and tech. I think it's going to spread out. In fact, actually, I don't see the market, at least this week, seeing money leave the market. I think it's been a lot of rotation going on. So I think what we can see between now and the end of the year, seasonality will kick in. We still have a lot of things that are very pro-business. But again, we have to get over this uncertainty with the Fed, one way or the other, cut or not cut. But at the bottom line, Julie, is they're going to cut rates. They're going to accommodate at some point. Now, like a spoiled child, the market is, they want it their way and that way. They go 5-year-olds screaming on December 9th, December 10th. It may not happen, but throughout next year, and most likely with the labor market kind of sputtering, they will be cutting rates. So the big picture is rates are coming down, maybe or maybe not at this meeting, but throughout 26 in the market, we'll definitely make adjustments for that.
And so when you are looking around for those other ideas, you mentioned Walmart. Are there any others that sort of stand out that could benefit from some of the tailwinds that you're talking about?
Yeah, so JP Morgan, best in class. Again, we don't go out and buy 4 or 5 bags. We like JP Morgan. Again, as growth managers, funny to say that, but Jamie Dimon knows what he's doing there. By cutting short-term rates, again, with or without December, withstanding, you're having a steepening yield curve. I mean, companies and banks basically print money when you have that steepening yield curve, which we're going to see. So I think JP Morgan would be a place, again, especially lower the beta portfolio, trying to find some names outside of technology. They're going to benefit from Fed rate cuts.
What do you think is still kind of the biggest risk between now and the end of the year or going into early 26?
I still think the risk is, we've been hearing more about a lot of these contracts, all these contracts run through OpenAI, it seems, with Sam Altman, where they did about $10 billion in business this year, which is great, but they have about $1.4 trillion in deals out there. I think the risk is are these tech companies going hog wild, too much money spent in this? They've gone from like balance sheets of zero debt to now debt. So I think not only for the end of the year, Julie, but into next year, there's always going to be questions about these kind of circle jerk kind of compounding deals that are not so straightforward. I think that's going to be a monkey on technology's back for some time till we get better clarity how these deals are working, how they're going to be funded, and who's funding them.
Ken, great to see you. Thanks so much.
Great to see you also. Thank you.
Coming up on Yahoo Finance, opening bid with executive editor Brian Sozzi. Soz, what are you going to be watching most closely today? Oh, we don't have him. He's not there. So we'll just have to guess And stay tuned and watch. That does it for Morning Brief. We got much more ahead on Yahoo Finance, including Brian Sozzi.